Rocket Lab investors need to pay attention right now because RKLB is sitting at one of the most important levels we've seen in weeks. If this support breaks, the stock could be setting up for a much larger correction than most investors expect. In today's Rocket Lab stock analysis, we're going to look at the exact levels that need to hold, the downside targets if they don't, and what Rocket Lab has to do in order to avoid a much deeper sell-off. Let's jump into the monthly chart, and right now the price of Rocket Lab is at $84.54. The last time I made a video, we were around $115, and that was right before SpaceX IPO'd. Now, a lot of people were speculating that maybe SpaceX was going to be able to bring up the other space stocks, but unfortunately, a lot of them did sell off. They probably sold off in order to get into SpaceX. Now, when we went over the monthly chart, we were like around here, and it was a red candle, but it wasn't that bad. Since then, we flushed all the way down. Now, I was telling you guys, we were very far away from the 21 moving average, which is currently right now at $50.31. And when we're far away from the 21 moving average, we either have to come down to get closer to it and touch it, or we have to go sideways for a while and wait for the 21 moving average to catch up to price. As you can see, now we're much closer to the 21 moving average. The RSI is toppy. It looks like we're rolling over. This is not looking good. The stochastics RSI here look like they want to start rolling over as well. We head over to the weekly chart. We were at this candle right here. Last time we had the Rocket Lab update, and again, we were far away from the 21 moving average. I said if we didn't go sideways, we were going to go down and touch the 21 moving average, and that's exactly what happened. We went down as low as $80. Now, if we cannot hold on to this 21 moving average and we close below it, our next logical step would be to hit this 50 moving average, which is at $70.59. Now, the RSI has to hold here above the 50. If we drop below this dotted line, it looks like we're going to have more downside. The stochastics also need more time to reset. Now, one thing that we don't want to do is lose this 50 moving average with closing candles on the weekly time frame. Once we do that, that to me signifies that we're going to a bear market for this asset. And if we lose this 50 moving average right now, the next line of defense is the 80 moving average at $53.62. If we lose this 100 moving average at $45.35, then we could crash down to this 200 moving average. That's all the way at $25. Now, again, we have all these lines of defenses before that happens. Let's see if we can hold support above this 50 moving average on the weekly time frame. If we head over to the daily chart, the stochastics here are low. The RSI is pointing up, but look, we lost the 21 moving average. We lost the 50. We lost the 80. We lost the 100. We lost all the lines of defense. Now, the 200 moving average is the last one standing. That's at $74.89. We could come down to test that, and if we lose that, then it could be lower prices. So let's see if we are able to make some type of recovery back up. Maybe this could turn into some type of inverted head and shoulder, left shoulder. Maybe we make the head, if we come back to the 50 moving average, go sideways here for a little while, make a right shoulder, and then from there we can make it back up. If not, we could end up going lower. On the 4-hour time frame, we see that the stochastics are starting to point up here, but on the 4-hour time frame, once we lose the 200 moving average, I do become a bear, and right now we're losing it pretty much. Now we have a chance to recoup it and get back above the 21 moving average. I'll feel a lot better about that. But if we continue going sideways here, it looks like we might be making some type of a bear flag. And if this ends up being some type of a bear flag, the measure move to this could bring us down lower all the way to about $65. So let's see if we fill out this flag and we drop off lower, or if we could recover above this 200 moving average and then slowly start regaining all these other moving averages in order to get bullish again. As long as we stay below the 200 moving average on the 4-hour time frame, I have to remain a bear. It's not too bad now. We could still recover it, but if this bear flag plays out, we drop to $65, then I would expect more downside. On the 1-hour time frame, we see that the stochastics are getting toppy, and we kind of got rejected already off of this 21 moving average. That's not looking good. We left off with this green candle. Let's see what ends up happening next week. If we can make it back up to about $95, which is this 50 moving average. If we see rejection off of this 21 moving average, then that's not looking good for the 4-hour. That means that we're probably not going to get back above that 200 moving average. And again, I would expect more downside. And on the 15-minute time frame, again, below the 200, below the 100, we got rejected off of the 80. We're below the 21. Stochastics are low. This could roll over. Next week is going to tell us a lot. It looks like the level that we need to recuperate from is this $95 level. If we cannot get above this $95 level, I could see us going down to 75, 65, and worst case scenario, we saw on the monthly chart, we could even head down below $30. So let's see what ends up happening in the long run. But right now, I'm feeling a little bit bearish on the Rocket Lab stock. All right, guys. So that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.